Now, there is this worry, perhaps, that with the euphoria that came with GameStop and everyone rushing into Robinhood, we then get back to our normal lives. We start wanting to get out, being sat in bars rather than trading online. But is there still that pent-up desire, and are we seeing wealth built by it?
I think that 2020 was a very interesting year. It got a lot of people to participate in the market out of speculation. But as you mentioned, as people are coming back to their normal days and their normal lives, there is that need for them to continue investing, but they don't have the time to think about their portfolio, to construct a diversified portfolio. And so part of what's very important right now is for them to have solutions that enable them to start building wealth, even if they don't have enough time to do the research necessary to start that journey themselves.
Okay, so how is Atomic Invest doing just that? How are you helping build out the infrastructure that allows us to have a diversified portfolio? That's
a good question. If you think about what it took Robinhood, Wealthfront, and Betterment and other digital investing platforms to create their infrastructure, it required about hundreds of millions of dollars, years for them to build and maintain that infrastructure. What Atomic is doing is enabling banks, fintechs, and credit unions to be able to very easily launch similar investing platforms in just a number of weeks without having to go through the burden of reinventing the wheel from scratch.
So for the likes of Robinhood, which share price has been, shall we say, under pressure, competition, I assume. Everyone's going to be able to start offering a more accessible way to invest, right?
Yeah, in the next 3 to 5 years, we wouldn't be able to count the number of investing platforms in our hands. Investing will be ubiquitous. Banks, fintechs, credit unions, payment apps, anyone will have the opportunity to start their investing journey through these platforms.
Is the financial regulation there for it, though?
It is, in the sense that part of what we do at Atomic is we take over that regulatory burden for companies, for them to be able to offer investing without them having to build up the regulatory expertise to manage that solution, because we cover that for them.
David, I know that you're looking to move back to the US. I moved to the US from Europe in 2018 and was dumbfounded by the lack of fintech, seeming innovation. And many felt that it was really being born in London, in Europe, because the regulation was there. Is that the case? Why do you think that there has been some stark successes, but perhaps fewer of them than we are used to over in Europe?
That's a great question. I think that by and large, financial services were concentrated among large institutions, large banks, large asset managers that provided a monolithic solution for everyone. I think what we've seen happen over the last couple of years is a lot of entrepreneurial activity around building platforms that are targeted at helping specific types of people. And we're seeing an explosion of this. Just in the last couple of months, we've been able to speak to over 400 fintech companies that are really focused on helping people build wealth, helping people have financial platforms that otherwise weren't available to them.
David, are you hopeful? Because, you know, you sit here with a fabulous education and with like a focus on what is deeply complex. I have the great fortune of talking about business day in, day out, but I know how, even for me, you know, intimidating, say, the world of crypto is, because of the analogies that are suddenly used, because of the acronyms, and I feel that that's almost what Wall Street tried to build up back in the days of the heady days of 2008 with CLO this, CDO that. How intimidating is finance still for people who really are at the lower income space that we want to see included, that we want to see build wealth?
Very intimidating. We see that most people don't feel investing is for them because in the past, not as much effort has been taken to help them participate in investing. And so many people are still very risk averse. Many people require a significant amount of handholding. And I think this comes down to the fact that there is an educational gap when it comes to financial literacy and investing that has to be addressed in this country.
How? Like, is that about education? Because at the moment I see some really great content on things like TikTok and on Twitter, and I'd love to hope that like we and I can provide to that. But there's also a lot of rubbish on there too.
I think it's a three-pronged strategy. The first, let's say, the ideal solution would be for investing education to be part of the high school curriculum so that people can learn what investing is and what investing isn't, so that people can learn the benefits of not putting all your eggs in one basket, but really about diversification. I think that would be, in the ideal world, what would be best. What we're seeing happen today is actually quite interesting, where there are platforms that Atomic, for instance, is working with that are targeting people who have been disenfranchised in the past and allowing people essentially to be able to participate in investing and to educate those people in the context in which they are. I do think that work also has to be done through social media and through influencers because, as you mentioned, most of the content that's out there might be focused on what's buzzworthy. And if someone is receiving their investing tips from there, it's likely they'll end up with a basket of individual securities or asset classes that aren't diversified. And so I think a lot of work has to be done as well, and not only having voices that are speaking about what's trendy, but also voices that are thinking or speaking about the benefits of planning for the future, diversification, asset allocation, and other principles of investing that are very important to adhere to.